Hey, thanks for tuning in. This is a weekend review for the week ending June 17th, 2022. We're looking at a chart of the 10-year Treasury note. This is the weekly chart, and that is an interesting looking candle. Some would call it a hanging man. It's not a good look. Graves, it's not a good look. I just call them dojis. The close was at 323. That's also of note to me. If you go back here, this double top setup that we were looking at here was at the 324 level. They started to gap above and closed pretty much where they opened. And that's what creates the doji look. Couldn't hold any of the gains. You have a negative divergence in momentum and directional movement. This ADX line continues to put in lower highs despite the higher highs in price. The structure here is very, very extended. And if you were to, even take a look at where support would likely be, it's somewhere around here. So the reason we're looking at TNX, right, is the relationship that TNX has with commodities is very important, and the relationship that TNX has with TLT and bonds is very important. Let's take a look at the monthly chart of TNX and see what I'm talking about here. So we have our three touches of this trend line with lower lows each time. And then I connected the highs, which were higher highs each time. So to me, this is an expanding pattern, a broadening formation. And that meant price had to get above 324. Now that happened this week. And she went all the way up to this trend line. And that was the end of it. That being said, she's still above a rising 10. This could be far from over. She's still above the 314 breakout area. But what this does kind of bring into picture is like what are all of these gaps, and what is this gap in particular? We don't have volume on this chart, so we're not going to be able to tell or answer that question. We need volume to answer that question, but generally speaking, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 sessions straight up. Up 30% in 12 bars straight. So that type of rise definitely you anticipate some pullback, and that's what they got. I do find this weekly very interesting, and if you look at TLT, the inverse relationship with TNX, you do have what looks like some doji or reversal candle on above average volume at the fib extension of this move here, which from where I sit is still a broadening formation, just like you have on TNX. Right, we have that here on TLT, which makes perfect sense. These are inversely correlated. And what you're going to find is that if TNX is topping, TLT should be bottoming. And if TNX is not topping, right, if this is a breakout on the monthly, and she does find acceptance above 324, I don't know why this thing couldn't be going to all-time highs. All right, there's no reason to think she can't come all the way back up to 15 to 20. Because this would be a long-term breakout, right? And you can start to draw this here, and maybe we have the breakout now, maybe we don't. Maybe it's a false breakout, I don't know. But this looks like you could be putting in a lower high in ADX. And in terms of PPO, this is still full bull. Like, there's nothing wrong here. But what there is is a breakout now that's lasted 4 months. Okay. And just in general, they don't last that long. And what do I mean by that? The Bollinger Bands, they contain about 90% of price action. And as a result, when you get outside of that range, you are experiencing essentially an outlier. What happens 10% of the time? And in technical analysis, they use close below the band as a signal to sell in the direction of the breakout, and a close above is a signal to buy in the direction of the breakout. And here you had 1, 2, 3, 4, and on the 5th month you started to revert back to the 10. Okay, so we're now at 4 months and we still haven't reverted to the 10. But again, I think that's what's coming. The 10 at minimum. And when these moves ultimately end, they do end in the same way, where they get below, they stay below, then they recapture and go all the way back to the 20. And this happens over and over and over again. And it's essentially, the process of price discovery and then reversion to mean. And when you're outside these bands, we call that price discovery. When you're back inside the bands, we would expect you to come back to the middle of the band and call that mean reversion. And that type of, give and take is what happens all the time in markets. So the relationship that I want to talk about with this TNX is really the relationship with TLT and ultimately SPY. And so if you go look at a chart of TLT, SPY, TNX, and DBC, DBC is just a commodities index, you'll see that back in 2020, everything bottomed at the same time while bonds were exploding higher. So you had bonds top and rates bottom on exactly the same day. And then shortly after the bonds topped, you had a rates top. I mean, literally, and this was such a heck of a move in two weeks, all the way up here. Anyways, that was the COVID move. And at the same time, rates were peaking, bonds were bottoming, and the entire market was bottoming at the same time as rates were peaking. Right, does that make sense? So rates are going to peak. This yellow line is going to peak. And then every other line can start going up again. Now, it's partially true. DBC is the exception. When rates break out, it puts a lot of pressure on bonds because of that inverse relationship, and it puts a lot of tailwind behind commodities because of that positive relationship. And you can see this when price breaks out. It's a very, very significant level, a significant moment in time for this relationship. It's more so about the rate of change than it is the direction of the two assets. So just keep in mind these relationships. They're constantly going on, and what I'm looking for is if TNX is topping, we would expect TLT to bottom, right? And we would expect the commodities to top. And then SPY lags, as you can see. SPY is generally a couple days behind the TNX. So here, TNX bottom, and it was exactly the same day that bonds bottom. TNX top, bonds bottom, and then within 2 sessions you have an equities bottom, a SPY bottom. And so that's like the relationship between TLT and SPY. That's what they say. The bonds are leading the equity market, right? You can see it right here. The 18th, you've got the bonds bottom. 2 days later, you've got the equities bottom. So, let's go back to these charts that I was talking about. Like, are rates topping? We don't know yet. But we have all the conditions in the chart for this to be a major top. Everything is here. And we do have what looks like a bottom in bonds. So I'm watching this relationship very closely. We do have all the volume flooding in here after we broke this pivot low. And as we came down into this orange line, which is the POC, and if you go back basically to 2000s, this is where most of I like to use this line as like the fair price. Like this is what a good deal would be on TLT, and it's $119 right now. So again, you're getting a good deal. This could go way lower. That's the reality, right? So if 108's not the bottom, let's talk about TNX breaking out. And what would happen is DBC would continue to go up, and that's what you would want to play. Oil, all of those names. But we don't have that. We actually have a top in all of those names this week, right? And if you look at XLE, you don't have strength anymore. This is an outside bearish monthly reversal candle, right? After rallying for more than 9 sessions, or 9 candles. And this is a monthly time frame, so that would be 9 months. And so the idea is that you're only really looking for a move for 9. That's the number. Best case scenario, you'll get a 13 candle move. And these are just numbers that I've seen over and over and over again. It's not in a book. It is what it is. So if you count from here, you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And on the 9th candle, you got this doji. And on the 11th candle, you got this outside bearish reversal. And you have all the green volume here and little red volume. And the red volume that you do have is eclipsing all of the previous trading range. So this is telling me that price expansion is happening. To be very, very cautious. You zoom into the weekly. Again, gap and go, close at low on week. We're below the 20. Last time this happened, they captured it the very next week. If they don't capture this next week, it's over. And from where I sit, this is a bearish divergence. But, again, there's a lot of people who would happily buy somewhere down in this range. So if you're looking at this close below the 20 and not viewing that as a bearish signal, you have a bias. The same way, if you look at the TNX chart and don't see this divergence and this topping candle, your bias is too strong. So that being said, we've talked about the relationship between rates and bonds. We talked about what's happening with commodities as a result. Look, this is the buy setup right here at 28. You get below 28.40, this thing's done. And, this is a subjective trend line, this one here, but they're breaking it. That's what it looks like to me. And this orange line is really the dynamic trailing stop that I like to use the most, the 10. Right? You get below the 10, we're done. I'm not interested. We'll reassess at a later time. You get above the 10, I'm willing to give the thing the benefit of the doubt. In this instance, she's given up the yellow line, which is held here for, again, way longer than we would expect. 12 bars, that's more than the 6 to 9 average that I see. And if you look at this candle here, again, we do have the start of what looks like a failed breakout, right? This level here, again, this is an ascending triangle. That's from where I sit, right? A, B, C, D, E, something like that, however you want to draw it. Right, here's the triangle. You can see it. We broke out. We're back testing. That can happen. All right, but when you talk about breakouts, here's the thing that matters most. Okay, it's something like 66 or 75% of them fail. Breakouts that back test tend to have less strength for the overall move. It doesn't mean you can't participate. It doesn't mean don't buy the back test. It just means that the best breakouts don't back test. They don't give you a chance to get back in. And when you take those two pieces of data, i.e. they fail often, they fail more than they work, And when they fail, it's generally a move in the opposite direction and it doesn't look back. So, from where I sit, this chart has not reverted to mean in a very long time. We never got the PPO reset to 0. Came back to the 2 line, which is fine, but this looks like a bear cross. The histogram is telling me that this trend is basically over. This looks like distribution. It looks like a triangle, which signals essentially the last stop on the ride. They often appear right before the top as a distribution pattern. The commodities space, this trade looks dead to me, and it looks like distribution. Same thing with the energy trade. Okay. And again, I'm trying to explain to you why that is. It's because this chart is topping. All right. When this chart decided to break out, all right, back here at the start of the year, TNX broke out of this level, set a new high relative to the April 21 high, broke out, back test, leave the station. When that happened, commodities doubled. And you go back and look. November to present has been all commodities. And the reason for that is the relationship or the correlation between TNX and hard assets such as commodities. Because when hard assets, generally are appreciating as a result of the rise in rates, you would expect them to fall if rates fall. So this relationship is what's driving the markets. It doesn't matter if you have a stock in China. It doesn't matter if the stock is in Latin America or the US. They're all following this market. All right. And the bond market, as I showed you before, is going to lead the equity market, which is this orange line. So now that I've given you all of those relationships and we've spent 17 minutes talking about it, we'll look at the majors real quick and see what I see in equities. Okay. This is a problem. Definitely a big problem. That being said, when ADX gets this high and PPO gets this low, you tend to get some type of bounce. And what do I mean by that? When you're approaching a previous peak or a previous trough, you tend to get some reaction from that area. Okay. We don't have one yet. All right. We have a gap and go on the weekly, closing well below the bottom of the band. This is generally what signals the breakout, and that breakout can last for 3 to 4 more weeks, some cases 6 weeks. As you've seen here, 1, 2, 3, 4, reversal 5. Okay, we've closed below. That's it. That's what we have. That's not a bullish setup. You do have a 5-wave move lower. And if you turn after hours off, you do have a perfect doji on declining volume at a key fib level. You do have a 5-wave structure. This one's tough for me to look at in terms of how much lower, because the trend is clearly down. Momentum is very strong to the downside. ADX is confirming this move this move lower as trending, which is telling me this can continue for way longer than most people think. That being said, there is an auction process, and time regulates all auctions. And I do believe that quadruple witching was the timing component of this most recent auction. And if you look at all of the the periods of past performance relative to what you just experienced going back the 2 weeks, you're going to see that it was extremely rare. Yeah, so you look at how bad it's been, and I want to pull up some of these charts. So consumer sentiment out of Michigan, they've been running this study for 50 years, 40 years. Lowest consumer sentiment in 40 years. Okay. Powell says the consumer's in really good shape. So let's take a look at that. Consumer loans as relative to credit cards and other, et cetera, versus personal savings, right? So savings at basically, lower than where we were pre-pandemic, and debt higher. Not a good look for the economy. Ned Davis Research puts out a bunch of stuff. I love their system. I think it's great. Monday of this week was a 92-1 down day, the worst decline, volume advance decline since 2011. 3 consecutive 10-1 down days for the first time since 2015. There were only, I guess, the only other cases were these 3, 1941, 1943, 1953. So again, you're seeing this is an outlier, right? This is all I'm trying to show you. There's so many different charts here that we can reference. ISM manufacturing. There's just U.S. bond drawdowns nearing all-time worst levels going back 200 years. 15% down in the 10, 30% down in the 30. Real drawdowns are way, way worse. Not a good-looking chart for bonds. Again, that fits the sentiment, right? You want the sentiment to match the technicals. Okay, we hit the key levels. We've seen momentum flip up on the hourly, daily. We have the reversal candlestick on the weekly for TNX and for TLT, and we have the sentiment. That's kind of what you're looking for. Searches for inflation are hitting all-time highs, right? This is higher than the '08. Again, people don't recognize that this is different than anything they've experienced before. Most people haven't traded in commodity bull market cycles and inflation. All-time highs for stagflation as well. Again, people aren't making more money to keep up with the rate of increase in their hard assets. The difference between upticks and downticks on Thursday was just right at open, neg 2,000. There'd only been 3 other sell programs of this size or larger in market history. So again, extremely rare price action. Definitely fat tail distribution. We did have the 530 spread invert, and then as soon as TNX stopped, it no longer inverted. It started to flatten out. Earnings revisions plummet. Again, this is what you see at the end of the bear market cycle, not the beginning, right? When everyone has revised down, that is in fact one of the last things that you look for, because you got to look at it like it's forward looking, and if they haven't revised down and everyone knows that everyone's going to miss, that's the risk, right? But now if everyone's missed and everyone's revised down, what's the risk? The risk is it's not as bad as they thought, and they beat and they go higher. So it's just, again, it's adding to this weight of the evidence approach. Again, this in and of itself is not a buy signal. This is just taking the weight of the evidence and giving you, like another piece of evidence here, right? Bank of America bull bear indicator, extreme bearish. Went from 0.02 to now 0. Okay? 0. I've been watching this one a while. I've never seen it this low. The junk bond spread is a problem. This being at this level could definitely cause more headache. Again, this is telling me the pain is not over yet. So there have been 7 bear or near bear markets that took place without a recession. The average drop was 23%. This time we're down 23.6%. Again, so there's a lot of these things are showing me that we're at extremes in terms of sentiment and in terms of, is it possible we're in a bear market? Yes, I think we've been in a bear market. I think we've been in a recession since probably the beginning of 2021, when everyone was super, super greedy and felt like, the bull market would never end. Now it seems like the bear market will never end, and this is exactly the same time it generally does. Again, there's a long way to go. These charts are broken. You do have a divergence here that's still in play. It definitely could be saved. You look at IWM, we've got a similar problem here. Start on the monthly, below the bottom of the monthly band. All right, so this is extremely rare to go from the top of the band, closing outside the band 1, 2, 3, 4 times. And remember, this is what TNX did, right? Every inflation bull wants to sit there and pretend that you can't use technicals to measure overbought. But you can. And you can use them with your macro thesis to get better insight. The same way you can use sentiment with your breakout alerts to decide not to take oil breakouts when we got the signals last week, 2 weeks ago, 3 weeks ago, because the sentiment did not match the technicals. The sentiment was saying that was a technical bull trap. That was the high probability bet, and sure as hell, that's what you got. And now you look at this IWM monthly chart, 1, 2, 3, 4 closes outside, and what happened? Straight distribution to decline. The thing never rallied again. That's what's coming for TNX. And again, this is lagging the bond market. So these things are going to be watching the IWM SPY, QQQ, all of the things that we normally watch. They're going to lag the bond market. So if TLT is bottomed, you're going to see this week, you're going to see follow through to the upside in TLT, which should give strength to equities, and you're going to see TNX collapse and accelerate to the downside, again, dragging DBC, oil, natural gas, commodities, and housing prices with them. And this is, I believe, what will spark the rally in equities that's about to begin for the next, again, 3 months. It could be less, but I fully anticipate something like this on all these charts before we do what we just did again. Okay, this is where I sit. This is what I'm looking at from where I sit. Remember, you had this thing here from start to finish, took 1 year and 7 months. All right, so maybe we just go straight down for 1 year and 7 months, and May 2023 is the end of this. Or, just like we did back here, just like we did in every single correction, right? We go down, up, down, down, up, down. Okay, we just have the straight down bit. And you can argue maybe this was the up bit here. Okay. But that doesn't match any of these others. None of these corrections, even the 08 analog that everyone loves. Look, there it is. Up, down, up. We don't have that anywhere here yet. Okay? And that's what's coming before the real pain, if in fact this is an 08 analog. So, from where I sit, closing below the bottom of the band after a no bid decline of 33% straight down through the 20, through the 40, right? They're looking for the final destination. And they're going to get there, and you're going to have a ton of buyers, and it's going to lift price higher. The question is, what's that number? And on IWM, there's a gap here at 153.09. To me, that's the obvious destination. And look, this is the orange POC. This is the fair price for IWM. But at this point, I want to point out, okay, here's the gap on the weekly. They filled the gap and they closed above it. That's not bearish, that's bullish. That's usually where you rally from. All right. But this market is going to follow SPY. And some say it even leads SPY. So I'm watching this just like I'm watching TLT to see if this thing is all over. I mean, we do have the positive divergence, lower prices, higher lows in momentum, and lower lows in ADX. It's exactly what you want to see. The question is, what type of gap is this here? Is this just a common gap? Right? Is this a bullish Harami reversal? Yeah, it is. So things are setting up, right, on all these charts for a big rally. You know, it's just a matter of when is it going to start. How could I do a review here without ending on Bitcoin? Again, one of my favorite risk on, risk off indicators. It is definitely signaling risk off. But from a time standpoint, this is exactly when I was anticipating some type of rally. Okay, it would have been, we want to see wave A be equal to wave C if it's a correction. If it's an impulsive move where prices are going to go in the direction, in this case lower, for a very long period of time, what you would expect to see is A be very shallow and this C get very long. And what we then would find in the ratio is that this would actually equate to something way, way lower, right? To get that impulse look, that 1, 2, 3, 4, 5, right? But from where I sit, this still has corrective written all over it. And the target right now, after giving up 25, is 12,000. That's the target this weekend. They get down to 12,171 or 13,764. That's the buy. But here's the other thing. If you were listening to what I was talking about earlier, what happens with the Bollinger Bands? They contain 90% of the price. So what is the high probability bet? That price is going to come down to $18,397, the bottom of this band, and then reverse. Remember, the bands are containing price. And when they break out of the band, you're getting a breakout or price discovery phase. Okay, so we don't have that yet. We just have some reversion to mean. You had a big move. Now we're reverting to mean. And what's really crazy is as long as she stays above 13,764, there's no reason this can't be still part of a larger move higher. So we got to just play this one day by day and see where she lands. Right now, as I've been saying, this $18,000 level, 18,130 or whatever, is where price will likely stop. And the daily chart is showing me, though, that it's going to be a long weekend. It's going to be a long weekend. Right? Still below the bottom of the bands. She gets above the bands, above the 5, we got something else going on. Get above the 10, the correction is well underway, right? But for now, it's trend mode lower, and there's nothing you can do about it. And this will ultimately be either the month where she reverses, something like this, big old wick at the bottom, and then start the march higher, or this is going to be the period like here, where we really are just starting the breakdown. But look, we're below the 40, which has been the trend indicator on the monthly for Bitcoin this whole bull market. Okay? Bitcoin has never gotten to the bottom of the monthly Bollinger Band. And that's where she is now. And most people won't want to buy her there. So yeah, that's about all I've got. If you like the video, hit the like button, subscribe to the channel, share the content, and we'll see you in the next one.